All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Visit the website at cubicleinvesting.com. Today is Sunday, February the 13th, Super Bowl Sunday actually. So just want to give you guys some comments on what took place in the market this past week, and also to discuss the PayPal trade that I mentioned in last week's video, as well as a trade that I put on this past Friday based upon how the market performed this past Friday. So let's check it out. All right, we're back. Let me move myself out of the way here. So what we're looking at is a daily chart of the S&P 500. Right, so these five candlesticks here represent the daily price action of this past week. Right, so the week prior, as you can see here, the market was trending upward very nicely. Although on Thursday, we got the news from Facebook or Meta regarding their negative earnings report because of their large influence on the overall market. When its stock price pulled back, the overall market pulled back as well. But on Friday, the market recovered slightly and was able to close out on an uptrend. Then this past week on Monday, the market opened up, but then it closed down, and then the market recovered and allowed those folks who got in on the long side, meaning that they were actually buying stock or potentially buying call options because they were influenced by this previous price action in the market. So they got long, and the market, decided to forgive those folks and decided to continue in an uptrend. And then we got the consumer price index information that came out from the Bureau of Labor Statistics, and the CPI, or the consumer price index, actually measures the rate of inflation. And so the expectation for the CPI number was around 7.3%. But when the number was reported, it was reported to be, the rate of inflation was reported to be 7.5%, slightly above the expectation. And as a result, the market responded negatively as expected. It pulled back on Thursday as well as Friday, right? And so right now the market closed below its 200-day moving average. And again, we always like to look at that 200-day moving average as an indicator to a potential reverse in trend, and potentially, it's so a lot of folks look at the 200-day moving average as a point of demarcation between a bull market on an upside and a bear market on a downside, or below the 200-day moving average. So again, always look at the 200-day moving average. So the other thing I like to look at, in addition to the 200-day moving average, is the Fibonacci retracement, right? Specifically, I like to look at if a underlying, and an underlying can be an ETF, exchange traded fund, it could be a stock, or it could be an index, right? So in this case, we're looking at the index, which is the S&P 500, right? And so considering that, the last few days, the market closed on a downtrend, it's always interesting to see if the market will actually test or close above the 50% retracement on the Fibonacci, right? And so as we can see, it was tested right here. So it actually went below the 50% Fib retracement, but nevertheless, it actually closed above the 50% retracement. So nevertheless, I think we're still in an uptrend. This pullback is just temporary. I think once the market absorbs the commentary about the number of interest rate hikes that could potentially take place, I think we're going to see the market continue on an uptrend. So, and also looking at the other index, the NDX or the Nasdaq 100, which is primarily, it's primarily tech heavy. Again, the talk about the interest rate hikes and also the high CPI, Consumer Price Index, which again is a measure of the rate of inflation. So these interest rate hikes are impact the Nasdaq much more than the overall market or the S&P 500. So the Nasdaq, which is primarily made up of these tech growth stocks, they have a tendency to be highly leveraged, meaning that they borrow money in order to expand the operations of their business, right? And so if the interest rate actually increases, that means that the cost to borrow money is going to increase as well, and the cost of borrowed money is going to eat into the profit of these growth companies. And so what you'll see is when there is any talk of the Fed increasing its interest rate, you'll see that the Nasdaq 100 will be much more sensitive to those interest rate hikes versus the overall market itself. And so again, the PayPal trade from last week didn't work out quite as we expected. Let's just take a look at the so here was the trade that we had on last week. It actually expired this past Friday. We sold pull up my pointer here. So we sold the 120 put, and again we're on the put side, right? So we sold the 120 put and we bought the 110 to create what's called a vertical credit spread, right? And it's called a credit spread because we're actually selling this particular spread and we're taking in income, we're taking in money, right? And so then on the call side, just show you the call side. So the call side is here. We sold the 137 and we bought the 140, right? And so the objective of this trade is basically for us to walk away with the credit in which we receive for selling these two vertical credit spreads, which are called together a iron condor, right? So when you sell a vertical put spread and also a vertical call spread, it's called an iron condor. And we got a $250 credit for selling this particular option strategy. And so the objective of the trade is for the price of the underlying, and the underlying in this case is PayPal, to stay basically within the range of 120 and 137. So to stay in between those two short option contracts that we sold in order for us to walk away with the money on a day of expiration, which was this past Friday. Right, so as you can see here, the price of the underlying actually dropped below our strike price of 120. So what we did was on Thursday, I think Wednesday or Thursday, as the price was declining in value, as it was approaching our vertical credit spread on the call side, we decided to close out, basically to buy this vertical put spread back, close it out. We left on the call side, and essentially we walked away with a small loss of $197. Right, so small loss, not a big deal, but we were able to put on another trade this past week on Roku, and we actually walked away on the Roku trades with $478. So a net positive in any case, but nevertheless, it's again one of the benefits of trading options is that all right, so the trade that I put on for this week, I actually put this on Friday. It's called a butterfly. So I bought a butterfly spread for $345, and a butterfly spread is essentially, so when you think about it in terms of a butterfly, I bought this butterfly spread on the put side. So remember, you got puts and you have call options, right? So the puts are to the right of the strike prices, and the calls are on the left of the strike prices, right? So now I'm on the put side. Why? Because the fact that when the CPI, or the Consumer Price Index number, came out, because it was a lot higher than what the market anticipated, the market began to pull back. And as I mentioned, that the tech stocks, which is what Google is, it's considered a tech stock, right? The tech stocks are much more sensitive to a high CPI, and also tech stocks are more sensitive to an increase in the Federal Reserve rate, right? And so I'm expecting for Google to pull back, and it has already. It pulled back on Friday a little over $86, right? And so so the reason why I bought this butterfly is because of the great ratio. There's a great win to loss ratio, right? And so I paid $345 for this butterfly spread. So I sold 2 put options at the strike price of $25.50. Let me just right, so I bought 2 put options at the strike price of $25.50. And then if you think about, so this will be considered the body of the butterfly, and here are your wings, right? Not much of an artist here, but nevertheless, so, and then I bought a put option at the strike price of $2,500. Then I bought another put option at the strike price of $2,600, right? But I sold 2 put options at the strike price of $25.50. And so when you look at the difference between the strike prices, right? Essentially what you see is there's a difference of 50 between each strike price, right? And so every option contract controls 100 shares of the underlying. The underlying that we're speaking of in this case is Google, right? So Google is the underlying that I'm talking about. So the multiplier is 100. So when you multiply 50 times 100, you get what? You get 5,000, right? So now I paid $345 for this butterfly spread. And so my potential profit on this trade, if all goes well, is $5,000 minus $345, right? And so just to do the math on that right quick, so 5,000 minus 345 gives you $4,655 is my potential profit on this trade. And I only paid $345 for this butterfly spread. So basically, I'm risking 1 to make 12, right? So that, to me, that's a very good win to loss ratio. And so the objective for this trade is for, let me clear this out here. So the objective for this trade on Google is for Google to continue to decrease in price, and as it decreases in price, my butterfly spread will actually increase in value. So as you can see here, I'm already up, slightly $85 on this trade that I just put on this past Friday. So we'll see how this week goes in the market. Hopefully Google will continue to decrease in value, and I'll let you guys know on my next video and my Cubicle Investing's Sunday market commentary. I'll update you guys on how this trade went. So if you're interested in learning how to trade options, go to my website at cubicleinvesting.com. Scroll down until you see what you see here on the screen. Put in your name, email address, click on get my free ebook. That takes you to another page. Scroll down to the bottom of that page and you'll be able to download my free ebook that teaches you the basics of options trading. And in addition to that, you will start receiving my weekly newsletter that comes out every Monday at around 10 a.m. Eastern Standard Time, where I'm always talking about, giving you guys investing ideas in the stock market as well as the crypto market. And I just give really good information about, the world of finance and investing in general.